Welcome to FinTech Fun Talks. Today, our guest is Alfred Milan from Express Wages, and we're going to talk a bit about microlending and some of the trends that he is seeing in recent years. So, Alfred, thank you so much for joining. And can you tell us a little bit about yourself and your background?
Yes, thank you, Christy. Hello to you and your viewers. It's a blessing to be here. My name is Alfred Milan. I am the founder and CEO of Express Wages. My background, I just recently sold a healthcare company where I was the CEO of, and really wanted to get into fintech. And so now we've launched this phenomenal company called Express Wages, and I'm excited to be here today.
I would like to talk to you about how macrolending, how that landscape has evolved in the past several years that you've been involved with it.
Yeah, things have really changed. I know you know that 79% of Americans in this country are paycheck to paycheck per Forbes in 2023. Access to capital for Americans has really become a major issue. And so they have become, capital insufficient. So for us, when I had my healthcare company, many of my employees, I had about 150 employees, many times they would come to me and to my staff asking for loans and needing money for their children, for gas, and for many things. And I knew that this was a problem. It was an issue. This could not be sustainable. And I kept saying
Yeah.
to myself, it has to be a better way. Because if you don't have access to capital, you either put it on your credit card or you go to predatory lenders, which are payday lenders, or you ask for relatives. And so I felt it had to be a better way to help them with access to capital, but also giving them value added services.
Yeah, thank you so much. And as you were talking about that, I was thinking, these are individuals, not companies. And so if we're talking about 79%, that's a huge amount. It's a huge amount. Um, 79% of people living paycheck to paycheck, essentially, going to relatives can even be difficult because they're likely in that 79% as well. And so they are reliant on things like those, payday loans, things like that really can put you in a deeper and more difficult space. So I'm glad to hear that this is something that has been on your mind and something that you are wanting to change. So before we jump into some of the other questions, tell us a little bit about what you are doing and how that impacts people on a day-to-day basis.
Yeah, what we're doing is giving access to capital. The new terminology that is really being tossed about is called micro lending. There are many great companies, solo funds, not promoting them in any kind of way, but there are many companies, SoFi. That's where the Los Angeles Rams pay, SoFi Stadium. They're all micro lenders. Chime is another one. We're doing it in a different what I'm really proud is that we're the first African American company in the United States in this space, and we're very proud of that. So what we're doing is actually having employees really have access to their money when they want to. Our tagline is called "Your wages, your terms." So if I earn the money and you're paying me biweekly, I should have access to my money. And what we have found is just through all the studies that if companies are not offering this ability to have the access, they're really gonna be behind the times. It reminds me of people who are going to Blockbuster and everybody's streaming. You'll kind of be just out of, AM and FM kind of a scenario. So I think it's important. So what we're doing is giving them access instantly and letting them choose when they want to get their money for whatever emergency they may have. If I'm a single mother and I have a flat, if I'm a professional, my wife's a nurse, she's in hospital, she has a master's degree. My wife does a lot in healthcare, and many of her friends make six figures, and guess what? They still use this kind of application because they need emergency, because they're part of the 79%. And so what
Right?
we're doing is allowing them to have access for a very small fee to their money, which is great. So whether it's emergency, whether it's if I want to just go out, the good news is the study shows that 88% of them use it for emergencies and not for frivolous things, which is fantastic.
And that is interesting, that people are being responsible with the money that they do have or the money that they're borrowing because the economy as a whole, I think for several years has shown them that they need to be. Things are
Absolutely.
not changing in a positive direction so much for the consumer as it is for businesses out there. I find it interesting too how you mentioned that people who are in the six figures are still doing this because again, inflation has, from my perspective, inflation has increased so much. And I've seen, studies done where they're no longer um, in the tax bracket, let's put it that way, that they used to be. And
Correct.
so they're struggling as well. Do you have anything to add to that?
My wife came home this week. It was interesting. And she said, honey, eggs are over $10 a carton.
It's
And she
crazy.
said that, and it was just $8 2 weeks ago.
Yeah.
And so you're talking about inflation, and so something even that simple, someone that's on a really serious fixed income that may be small to someone else, it's
Yeah.
really major to them, and so we take that very seriously. It's not just underserved people who are 79% is a lot of people. You know what I mean? That number is still the
Yeah.
number, so per Forbes, and so we understand that, but inflation has affected a lot of this, and the sad thing about it is per society HRM, they mentioned, human resources management, they mentioned that this will go on for the next 10 years,
You're
meaning this
kidding me.
labor shortage and yes, so this is not something that's going away in 2026. It's not. This is still an issue post-COVID, people having access to capital, so it's still a major problem.
So hunker down, people, is what Alfred is saying here. We've got 10 more
That's
years
right.
of this that we're
Thank you,
we're
honey.
going to need to navigate. Yeah.
That's right. That's exactly right. And I think one thing, Christian, too, that we thought about and we felt that was so important, and I thought about even my time when I was in high school, no one really ever taught me about financial literacy. They
No.
didn't teach me about financial wellness, and so we have a full platform on our application. We're thankful for the people who use the app, who pay the 4.95, the 3.95. There's also a free option as well. We're grateful for that. But what we're really grateful for is we have a partner called WellSense that allows us to allow anyone at no cost to get any kind of information, full dashboard information on financial wellness, whether it's for your children, your teenagers, how to grow money, how to invest money. They also have full access to a certified financial planner.
It's amazing and so important because, like you said, it's not something that we're always taught in social environments, in school, or whatever social situations we may be in. And also in our families, if we grow up with financially illiterate parents, for example, that's going to be passed on. And so providing these tools to people so that they can learn, so that they can be responsible, because as you mentioned before, people want to be responsible, but they don't always have the tools and they don't always know. So having this dashboard where they're able to see all of that, learn from it, keep a close eye on what they're doing with their money really will change the way that we are handling our money in the long run.
What I thought about is if you had someone who was in that 79% that worked in a manufacturing plant, nothing wrong with
Mhm.
that, and their grandmother passed and left them $50,000 or $100,000, what would happen without the education?
They just
Handle
lose
that kind
it.
of right, and so so that's why we've thought about that, and we think that is so important to have access to information for someone to guide them and help them for working for any company. We thought that was important.
Yeah, absolutely. We've heard that story time and time again with that it's become cliche, which is kind of sad when people win lottery money, that it,
Yes.
it tends to go really, really fast. And you
Yes.
wonder, how can that happen? But you're right, you're spot on. It is due to education and maybe not really knowing how quickly, $1 million can go. It
That's
really,
exactly
really
right.
can.
And I
Yeah.
think we believe the old adage, teaching people how to fish. So giving them
Yeah.
fish is great. They're hungry. That's awesome. But if I'm not showing you how to reproduce that for you and your family, am I really doing you a disservice? And so that's why we think having the education and the information is so important that we're hoping that you use the app. Yes, but I'm hoping more importantly that you use the tools we've set aside for you at no cost to help you and your family.
That's really great. I wanted to touch on something that you had mentioned earlier, that you are the first minority-owned company that is doing what you're doing, which I think is awesome, and that you're also really focusing on helping those in underserved communities. And
Yes.
so, I would like to hear some of the positives there. How have you seen positive impact and change in what you are doing?
Thank you for the question, Christian. Number one is I did not realize how difficult it was to raise money for fintech. I did. I thought if I built a phenomenal device that worked, and we've already spent $800,000 on our applications, and we spent a lot of money. We've raised about a million two, and now recently, just once again, just grace, we've raised another 2 million. And so we're really getting ready to launch and just do some great things. But I really thought the app itself and would speak to what we were doing, but raising money is difficult. It really, really is. And so this product, by the sheer numbers of the number 79%, would not just only be for underserved, it's for everyone because the number is so large, thinking about the vast number of people in our country. So we just feel like we can help anyone, but unfortunately, many black and brown people will be using this application. They're using it with my competitors. And I just think I took a different approach. I can't run from my reality. I am an African American CEO, regardless of what's going on in the country. And that's what I am. But I have a product for everyone. I want to help everyone. So, and I think that's so important. And so we just plan to do that. So underserved people, unfortunately, like I mentioned to you, education is absolutely, I think, the answer. It's important. And we plan to do that with every owner that we talk to, every employer and every employee, and educate them that, hey, we appreciate you helping us grow to be a phenomenal company, but also we think we have some value added services that are great for you and your family.
And there are so many underserved demographics, like you mentioned, the Black and the Brown communities. You've also got those who are living in poor communities or who are unemployed. There are just so many different ones. And I love that your goal here is to level the playing field, to make this accessible to everyone, regardless of their circumstances, which really does help us as a community as a
It
whole.
does. It really does. I think it helps with crime. Can you imagine working every day, not feeling good about what you're doing? You're broke every day. You're paycheck to paycheck. There's no way that, the gravitas of that is going to be so serious that you could only feel bad about yourself, your circumstances, your family. I'm a single mother. I got 4 kids. And I'm like, I can never get out of this hole. And then I go to payday lenders. They're charging me 400%. I mean, there's a study that came out that said the average American cannot afford a $400 emergency per Forbes magazine. A $400 emergency will put them, I mean, almost out of the game. $400
Wow.
emergency. And so that is so important that we at least now say, okay, I worked yesterday. I worked today. Let me have access. If I want to pay a couple of dollars to get my money, I'm okay with that. At least now I'm not putting it on a 26% APR on a credit card or going to a payday lender for 400%. It gives me a better perspective of my own money. That's why we said your wages on your terms when you want it. And then we thought that was important.
And it speaks to the fact that everyone really is so different and has different circumstances. And so the fact that you're able to customize to the terms that they need or the conditions that will benefit them the best, I think is really unique. You know, like you said, going to maybe a payday lending type of place where you've got number one, the really high interest, but number two, really tight terms that are not flexible, that people
Yes,
cannot really work with. And it puts them again even further in the hole. You know, as you were talking about, a single mother with 4 kids and the difficulty that they have in just, again, living paycheck to paycheck. What happens when a medical emergency arises, And
exactly.
that ties in with our healthcare issues. That's a whole other topic, right?
Yeah,
But it's a big situation that happens to a lot of people.
that's a very, very good point, Christian. It really is. And what we did was we thought about if I had a family emergency, what would I do? So what we did, we partnered with Allstate Insurance. They've been a
Mhm.
phenomenal partner for us to really, and they asked me what did I want to do. For we believe you got something special, and so we partnered with them. They're one of our national partners, and so they've put together some really great insurance that are affordable. That are affordable for
Amazing.
not just underserved. So even on our application, not only will you have access to financial wellness, but you also have access to insurance, which is important. You just talked about health. So your child gets really sick, you have no money. You don't even have
Right.
Medicare. What do you do? You get a
Right.
huge bill from the ER is what you get. That's what you get is a large bill from the ER. So now at least to have the opportunity to at least have the ability to see the information, have it, we just thought was critical for our company. And we just could not start the company and just want to grow it off the backs of people who are giving us our funds. And we just wanted to do something better.
Yeah. Well, I really appreciate the social impact that what you and your company are doing is having. It's really amazing and will really make a difference as people begin to adopt this. So I'm curious about how things like regulations might be impacting the way that you do business because fintech is a very highly regulated industry.
Yes, it is. And the good news is there are 7 states who have said that this is a viable product for their state that have
Hmm.
regulated this. Missouri being one, Vegas being one. Governor Huckabee just a couple of days ago
Yeah.
announced Arkansas in the next 90 days, and also Utah just announced that EWA will be the law of the land. So we're very excited about that. And the only one who has said that this is a loan is California. California is just
Yeah.
goofy within itself. I love California, I love Californians, but they're always goofy, and that's okay. But they're
Yeah.
saying that this is a loan, and it's not. And so they're the only state. So we have 7 states that have said this is great for people who need access to their money for a small fee. So those to your to your point about regulations, everything is trending towards this will be the law of the land. I guarantee in the next 3 years that out of seven states now, it'll be 15 by the end of the year of
Mhm.
2025. So regulations are favorable for us and what we're doing. For people who need money, no one else is going to lend people $200 for $4, for $3. They're just not going to do it. There's just no way you can do it and make money on it. So that's the reason why they're saying, let this be the law of the land, but let's have some guardrails around it, which is great because you don't want people getting into this space and becoming a predatory lender light, which makes sense. And so the answer is regulatory is positive, and we're grateful for that, that things are going in the right direction.
Yeah, it is a positive thing. It can be a lot to work around, but it is
Yes.
here to protect people,
There's
definitely. What about interest rates? That is something that we see fluctuate regularly. How does that impact the way that you do business?
Yeah, we don't do interest rates. We just do a set fee. That's the
Oh,
great thing about it. We don't check backgrounds. We don't. So the good news is if you work for an employer and you want to use the service, it's optional. This is an HR benefit to any company that's optional. So if I want to take out some money for whatever reason, you can, and it's a set fee. The interest rate doesn't affect that whatsoever. So it's not an interest rate, it's a set fee. It's like you going to the airport and there's an ATM there. You want to get $200 out, and they're going to charge you $1.75 to get that money out for convenience. There's a convenience fee. The bank charges them to be in the bank and be in the airport. It's the same thing here, but being an HR benefit. So the interest rate doesn't affect us in any form or fashion.
which is great because that can be a really difficult position for the lendees to be in when they see, oh, I'm in a really tough situation right now. I've got to borrow some money. I've got to have this advance. If I'm paying a really high interest rate, again, this just
It
puts me
defeats
in
the
a more
purpose.
difficult
It
financial
defeats the purpose.
situation.
It does. So we made this just high enough to make money to grow the company. We can't do this in a deficit naturally, but do it in such a way that it's also affordable. And I just thought that was so very important. So we're going to come out with a new product in the next 6 months that if you want to borrow $1,000, we're only going to charge you, say, 25 bucks. 25 bucks to get $1,000. There's nowhere in the
Yeah,
country you can get $1,000 for $20. There's just no way you can do that. They're going to charge you $200. $100 to get it out. So
right.
we just feel that's wrong, and so we're not going to do that. But you'll have more access to more capital, and we're working on that now in our application.
I love that you really are considering the human element in this and that these are people. It's not just money to be made. Obviously, everyone that's in business, we need to make money. That's part of
Of
it.
course, of
But you
course.
are really looking at the human element and considering that. So I love that. I would like to know what innovations are shaping the future of these micro lending practices.
I think what we have found is a lot of companies are merging together to offer
Yeah.
more things to them. You may or may not know this. Walmart bought a EWA company in 2022 because they saw the benefit of it.
I
So
did
you now
not
have
know.
Yeah, they bought a company called Even, EVEN. They've changed the
Okay.
name, but what,
Yeah.
what the trends you're going to see is large companies partnering with companies like ours and buying them. And the reason why it
Mhm.
makes sense, if you have a platform that really benefits your employees and is really taking them to the next level, you would just buy that company if you can buy them. And that's what we're seeing right now. Chime offered to buy another one of our competitors for $2 billion in 2022. They said no, but even Chime now is getting into this lending. So you're going to start seeing now the ability to see more micro lending and have it be more customized. That's what you're seeing now. Chime just announced a new product that it's $500. You get to pay it back within 90 days. To me, that's keeping people in more debt. That's okay. It's not our, and that's fine. But still, people need access to the money. But that's what we're seeing is more options and more customizable in the micro lending space. So that's what we're seeing.
And it sounds like becoming more streamlined and adopted, right? It's becoming something that people are going to become more and more aware of.
Absolutely, absolutely.
How do you see microlending evolving over the next 10 to 20 years? Anything in addition to these acquisitions that are happening?
I do. There are 7 banks right now that are currently have adopted EWA inside their bank for their professional customers. I know Citizen Bank does this, US Bank does this, Santander Bank does this. So there are many banks who are already. So you're going to see also not just streamline with employers, there are institutions, bank institutions who are
Mhm.
also doing this. And the other thing we're saying, this is also, I read an article the other day that this is one of the hottest things in Asia right now. It's micro lending.
Really?
Yes, and in
Hmm.
Africa. And the reason why is, Christy, is that they are paid monthly. Most people don't know that. This is
Oh,
not
yeah, that's hard to
not America.
manage. Yeah.
They're paid monthly, not biweekly or weekly. So you can imagine if I'm a maid in South Africa and I make
Mhm.
whatever I make in South Africa and I get paid monthly, but I have access to my money daily, it's major. Yeah, so we're going internationally here in 2026. We have a team that all they do is travel abroad, and so they're putting all this together for our company, which is great. And so we plan to launch internationally as well to be Express Wages Inc. into international. So we're
Yeah.
excited about that.
Well, and now understanding that need, right? The being paid once a month. I had one job where I was paid that way, and it probably
Sucks
took me 6 months to be able to get to a point where I could manage that.
that you can adjust to it. That's exactly right. So there are many
Yeah.
truckers in our country in the trucking industry that we plan to really help and assist. They're paid monthly.
Are they? It really
So
does change the game for them in a
it
lot of
it does.
ways.
Man, it really, really does. And that's why employers like it.
Once word gets out on this, I can see where companies would be like, of course we want to adopt this. And even maybe if companies aren't super anxious to adopt it, where their employees would be like, we need you to, and
And that's
pressuring
how
their companies.
to that point, that's how with my healthcare company, I had an employee, how we got to this point. She came
Yeah.
to me almost 2 years ago and asked me, do we pay daily? And I do a lot of insurance business in my healthcare company. And so there's no way I could pay daily because I get my insurance pays me in 45 days, net 45. So I began to do a ton of research. And so you're exactly right. This was driven by an employee asking me questions. So what's going to happen is you're going to have an employee working somewhere and say, "Do you guys offer this?" If they don't, they will go to your competitor who's offering this and work for them. So this is also
Yeah.
a competitive advantage for many companies as well.
It's an amazing way for businesses to show their people that they care about them, they care
Yes.
about the issues that they may be facing, and that they want to be part of the solution.
That is so correct. I'm presenting this weekend. I won't say the name, but as the company who signed up with us, and I'm presenting to all of their employees this Saturday that the owners have decided to move forward with earned wage access. I guarantee you, when I mention this to I'm gonna get. It's gonna be like I'm the king of
Standing
Memphis.
ovation,
A standing ovation. Have you ever seen anyone give you a standing ovation for an HR benefit?
right?
Never.
I know.
Never. And they do this for this particular for earned wage access. They clap their because they're thinking about, man, I needed money yesterday. I
Right.
needed it yesterday. So I'm gonna talk about that. To your point, your owners thought enough of you to bring this to you. Exactly.
Yes.
And so that's so important. But you're exactly right. And that's what happens when they bring on this benefit.
And it's not always seen. I've worked for both types of companies, those who really care about their people and those who don't think about it at all or think about it in ways where they maybe provide benefits that aren't really the important ones that the employees
Correct.
want. And
Correct.
so having that finger on the pulse of what your people really need is so important.
Yeah, we used to do a survey with our employees. We
Yes.
just thought that was so important. I didn't want to provide benefits, and you said that's a nice to have, but not a need to have.
Right.
I don't
Right.
need that. So we do that, and I just think that's critical now. And we're going to encourage a lot of employers to ask their employees, "Do you think this is something you would want?" They all are going to say yes. We would love to have access to our money. We pay for it on our terms. It's our money. Give us access to it. I don't want to wait 2 weeks to get my money. I don't. I want to get it now.
So, quick switch. Something that I have been talking to a lot of my guests about is how current trends or technologies are impacting their business. And so that would include things like AI or blockchain. And are you seeing changes or trends with those two things in microlending?
It is. So what we did early on, and we thought about this, we've added an AI bot that's already on our site now and on our
Okay.
application. So for customer service standpoint, so if someone needed to reach us live, I hate talking to computers. I hate that, and a lot of people do. But I want to talk to somebody right away. So we have an AI bot that's been built onto our application that you
Mhm.
can get access and information very quickly via AI, and it'll ask you questions. And so what we're going to do also is add an AI function that will help you with financial literacy to ask you
Cool.
questions about where you want to go. It was an idea I came up with, and I challenged our team to come up with something that would be simple, easy, and also secure that would be able to help someone that if I'm not really savvy, but I can go in and say, hey, I make $27,000 a year. What should I do? And that way it
Yeah.
quickly spits out to you what you should do if you're making that kind of money to save money and then goes back into our dashboard. So the AI will guide them, plus now they can see it live. We just thought that was a great idea.
I think so too, because a lot of times I think of I'm going to be dating myself, but not too much, I think. FAQs, right? Like frequently asked questions. It's very similar to that, but customized. And you don't have to go scrolling through pages and pages of FAQs to find
Yes.
a partial answer. You're getting something that is very customized to you and the specific questions and needs that you have.
That's a really a great way to put it. It's a customized FAQ. That's excellent. I'm gonna steal that, by the way, so thank you.
Yeah, go ahead.
I'm gonna steal that.
I use AI all the time for those types of things because you need that customized information. It's so hard to pick and choose from the different answers that may be published out there that are not a part of AI and make sure that you're covering all the bases. Whereas if you have something that is pulling from each different component and you know that you're getting all of the details that you need, you're all set. And especially when you're talking about this education component, we want to make sure that people are educated, trained, know what to best do with their money.
Absolutely. Absolutely.
Do you see decentralized finance or DeFi disrupting traditional microlending?
Don't. I think because there's so much opportunity right now, I
Yeah.
just don't see that happening. I just really don't. Otherwise, I don't think I would have spent the money we've spent into what we're doing if I felt it was
Right?
going to basically stabilize us, not to grow and not to move. So I don't think I would have done it.
Yeah. It'd be a risky place to be if you
Risky
did
place to
feel
be.
like it was
That's
going to
exactly
be.
right. Yeah,
Yeah.
the regulation things have really have us very happy knowing that they see the value per state. Each one of
Right.
them saying this is what we want for our state and made it the law of the land. So that's just fantastic.
Are there any additional trends or challenges that you're seeing in the industry that you want to make sure that we talk about today?
Another thing that we're seeing now, this is also being offered from payroll companies and
Yeah.
also HR options for other employers. So now
Hmm.
you have the ability to almost like check a box like your 401k. You'll be able to
Right.
say, I would like to sign up for EWA as an HR option, or you're going to see this, like I said, is mentioned just with that with insurance, whatever it is, almost checking the box that you want to add EWA to one of your HR benefits. And that's really a good thing. You have the ability to say yes or no to what you wanted to do. And then we're seeing growth and change in that in the trends in this micro lending space.
And if you had, talking about the more challenges side of things, if you had a magic wand and you could fix any problem that you're currently facing or the industry is currently facing, what would that be?
uh, Getting more money for us
Okay,
to
yes,
lend out,
right?
to lend
Yes.
out. That's number one. But also, that's a really good question. The ability for us to really have enough funding that I could lower my prices to the people that
Mm.
really need this product. I
Yeah,
sincerely mean that. I wish I could charge $2, a dollar
right?
15. I sincerely mean that. If I could do that and still build a great company, we would do that. There's no doubt about that. So the ability to do that, and that only comes with more money, more research, the development
Mhm.
team coming up with ideas and things like that. But seriously, I'm not saying money fixes all things because it doesn't. But I think in this case, like I said, we've spent hundreds of thousands of dollars already on our application. But I think as we continue to grow, we can cut costs to make it better for our clients. And that's what we would like to do.
And the thing is, you've only been in business for a couple of years, right? Right. So you've seen a lot of growth. You've seen a lot of adoption, but you're still at a fairly startup stage. And so there is that room for growth, change, mass scalability where you
Yes,
can then adjust your prices. So
that's
I love that
exactly
that's a
right.
goal of yours and that you, again, you've got the people in mind and that is who you want to impact and help and change.
Absolutely. Absolutely. Thank you.
Alfred, thank you so much for joining today. It has been a pleasure speaking with you and getting your insights.
It's been my pleasure. Chrissy, thank you so much. Enjoy being with your audience. Thank you.
Thank you. Thanks for watching our podcast today. I'm Kristen. I'm the owner of Copper Canvas Ads Agency and the host of FinTech Fun Talks. Copper Canvas Ads Agency is a growth partner helping FinTech companies grow and scale their business within a 12-month period. I've been in the industry for over 20 years and I've seen how saturated this market is and how difficult it can be to make your solution stand out in a really crowded market. And so that is what we are here to do, to partner with you, understand where your gaps are, and help create a plan to fill those gaps and really help you increase your growth and your revenue in that 12-month period. If you're interested, please go to our website, coppercanvasadsagency.com, and you can book a call to speak with me right there on the website. And I look forward to talking to you soon.